Insurance Linked Securities are instruments where the insurance company, the buyer, is buying a limit of cover that is either fully collateralized or fully funded by the counterparty. Examples of Insurance Linked Securities would be catastrophe bonds or collateralized reinsurance, and things like ILS funds, where ILS funds are maybe buying catastrophe bonds and or collateralized reinsurance. And we've seen great growth in this area. And it's brought a lot of new capital and new ideas into the reinsurance market. So if you go back in time, the traditional market is really an insurance contract of utmost good faith between a buyer and a seller. So the insurance company would buy cover from another insurance company in the form of a reinsurance agreement. And in the event of a loss, the reinsurance company would pay losses to the insurance company. And in the event of no losses, the reinsurer walks away with the premium. The catalyst, or one of the catalysts for the insurance linked securities market is that buyers, in some situations, were getting concerned about the counterparty risk of just buying from another company, because in the event of a very significant or series of significant catastrophes, the reinsurer could become insolvent. Then the insurance contract that the buyer has purchased becomes worthless because the reinsurer has no funds to make good on its obligations. Whereas in the collateralized or ILS structure, those funds are kind of firewalled and they are readily available for the buyer in the event of a loss, and that's all constructed under the legal documents of the transaction. So the buyer, apart from getting the fully collateralized cover, the buyer may also be able to get multi-year pricing. So rather than just buying a contract for a year in a softer market, and we're in a softer market at the moment, a buyer can maybe go out several years, typically 3, let's say, 3 years, and lock in a price over an extended period of time. And that's attractive to them because, you know, if we have a large event in any given year, in the past, pricing would respond to that and would increase. Whereas you bought a multi-year cover and you lock that, we have some agreement around the parameters of the pricing early on, then you kind of benefit from that over the 3 years if the market does harden subsequently. From a seller's perspective, the sellers, as I said, are typically, you know, institutional investors or hedge funds and other types of sophisticated investors. They like the idea of owning an asset where their returns and their risk of loss of principal is not linked to the financial markets. So, you know, if they're buying a corporate bond, their risk of losing money is driven by the creditworthiness of the issuer of that bond. Where in an ILS environment, their risk of principal is linked to a natural catastrophe, for example, so an earthquake or a hurricane or the like. And that means that from an investor's perspective, it gives them greater diversity, and under portfolio theory, it would mean that over time they should get enhanced return from low volatility. And that's very attractive to investors, and it's really attracted a lot of money into the space. And I think the financial crisis, to the extent there's some silver linings coming out of that, you know, investors saw that the ILS asset class, even though it did come off a little in the financial crisis, it did not come off anywhere near as much as more traditional asset classes. And the reason for that is the fact that it's a non-correlated opportunity for them. It's grown because there are advantages for both the buyer and the seller. I also think it's grown because we're in a low interest rate environment. So investors are struggling to get good yield elsewhere, and they've been attracted into the ILS space because they can get a very good yield relative to the risk that they're taking, and I think that's drawn a lot of money into the area. So that's been very positive for the ILS industry. So we already talked about the softening rates, which is certainly a negative for the traditional market. On the positive side, a lot of the traditional reinsurers have formed sidecars or other vehicles that they will use their underwriting expertise to benefit. So, for example, they will write business directly onto the balance sheet of their sidecar and charge a fee and perhaps a profit commission for doing so. So the traditional reinsurer is earning underwriting income and other fees whilst writing against somebody else's capital. And it's good for the other capital because of all the reasons we just talked about why sellers are benefiting from this. But it's good for the traditional reinsurer because they're actually enhancing their own return on capital by getting fees where they're not actually having their own capital at risk. So I've been involved in the ILS area for well over 15 years, and over that time we've done a number of things, doing audits through some more advanced work around helping companies structure some vehicles, and general advice to the industry. We've done claims review services where we will go out and inspect claims in the event of a loss. We do actuarial work around assessing the amount of reserves an entity has to hold, and or a settlement price that should be struck between counterparties to close a deal out. And of course we also do tax services. So we've done tax services primarily around tax planning and then tax compliance for investors and people looking to start up these types of vehicles. Well, I think as a jurisdiction, Bermuda has become the domicile of choice for these vehicles. We have a great infrastructure here, an incredible depth of talent. We also have the reinsurance market itself. So you have some of the best and brightest intellectual capital that the reinsurance community has to offer within the 21 square miles of Bermuda. So that's a massive competitive advantage for Bermuda. And then, as a service provider that's been working in this industry for 20 years, we've developed a real leadership position in this. We were involved with the very first cat mod done in Bermuda. We're the only firm that's performed claims review procedures subsequent to the event. We have a very senior and talented group of partners and staff in the office, and we really have what it takes to differentiate ourselves from the competition. So I'd like to thank you for listening to me today. If you'd like more information, please feel free to visit our website, www.kpmg.bm, and you can find my contact details there. And please feel free to give me a call or drop me an email.